The following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when a lone fisherman in Mosquito Lagoon, out near Cape Canaveral, discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 11th fabulous Friday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely love being here with you, folks. I treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need to lead an inspired life. Talk about being inspired, folks. You know, I think one of the best tools that each of us can use on a daily basis is called preparedness. And there was no better tool. You know, it's what you want to always do is model others out there. And I hope that each of you were able to catch Tom on CNBC this morning, because there was no better state of preparedness than watching Tom during his segment on CNBC at 7:30. Tom will be here for the Money Masters show at 10 o'clock, so I'm sure we'll talk a little bit more about that. But I just thought he always does great out on CNBC. I think each time it's always a little bit better and a little bit better, and it's always because of preparedness. I didn't speak to him about it, but when he comes in here, we'll talk, and I guarantee you he was doing some investigative work, but really clear, and it was just simply great. So for each of us out there, you know, hopefully you are preparing for your day, for your trading day, your trading week, your trading moment, whatever the time frame it is that you trade out there. Always, folks, find others to model. I say Obi-Wan is one of those people that you want to model out here. So let's go take a look at these markets here. We got the futures are down just a tad here right now. Dow futures are off about 13. ES is down. S&P futures down about 2 points. The NASDAQ futures off 2. You've got the Russell down a couple points. King dollar pulling back this morning to about the 0.786 retracement of its last move up. We can take a look at that. It's trading out at 79.60. Gold's off $5 right now, out at 16.73. Tom gave a pretty good range of where you can expect gold here over the course of the next couple of years, 1550 or so. We know we've got good, strong support down at those lows, and I think it was around 2,500, 2,250, somewhere around there as a long-term prospect. So it was a great interview for sure. Silver off 17 ticks right now, down at $30.75. Across the pond here, struggling this morning. The DAX just turned slightly negative, down 3 points. FTSE is only up 8 points. That has been very strong. I thought that the U.S. did a pretty good job of handing things off last night. You know, you had the Dow was up 80 points. At one point, I think futures were up about 25 or 30 points. And pay attention to them all night. You had the S&P up 11 points. However, I don't know what happened to that handoff, because the Hang Seng down 90 points last night. The Shanghai off 42. That's off almost 2% out there. The Nikkei, though, was partying. They're partying over in Japan. Nikkei up another 148 points, up almost 1.5% out there. Our call-in number is always 877-927-6648. And let's take a look at yesterday's action and perhaps what it means. Now, what I'm going to start with here is I'm just simply got the 60-minute chart now for the ES Mini. And the reason I've got it, normally I take a look at the 30-minute or the or the 10-minute with you. But the reason why I've got the 60-minute is that if you are watching us on Tiger TV, it'll be a little bit easier for you to take a look at the consolidation lines that we're going to draw up here, because I want to be able to teach you something about the markets, what you should expect, and when that expectation doesn't happen, perhaps what does that mean? So we're going to go through and do that. Now, if you're just listening to us on a radio, I'll describe to you exactly what we're looking at. And then when you get back to your house, or maybe you want to go ahead and stream it on your device, because we know so many folks listen to us on TFNN.mobi, but you can also stream these shows live, which means you can take a look at the charts out there. Just go over on the right-hand side of the page. You'll see the smartphone devices out there, and click on that. You'll be able to stream these shows live. This show here specifically is archived on Channel 9. So we're going to take a look at a consolidation pattern. Why? Because this is a pretty decent consolidation pattern. This is a consolidation pattern that's set up after that big move up off of January 2nd, and consolidation patterns are really great out here. If we take a look at consolidation, because they're great from a trading range. Sometimes people call them trading boxes. We all have perhaps a little bit different names, but in essence, they're really the same. So we'll take a look at the top of the consolidation range here as we're looking at it. You know, what you're looking for, I would say really the top is going to be, if we're going to use the most conservative, and probably use the most conservative is the best approach. You'd use the high, I would say, that came in at 230 on January the 3rd out there, 1460.50. So I'm just going to draw a black line across my screen. You can do that as well on your charting platform here, and just line it up with the top. Now, what you can see here, as we've lined it up on the top, in fact, I'll move away from yesterday's information. So if we just take a look at it like this, I'll blow it up. Well, I could blow it up just a bit here. You can see that really during that time frame, you had really one breakout, lasted for one bar at 2:30 in the afternoon on January the 4th, and then boom, came right back in here. Looks like with a little bearish engulfing candle out there, dark cloud cover candle on at about 4:15 on that the following session. So I would say the top of that line, and you want to go ahead and write this number down on a pad of paper, I suppose. So do I. So 1460.50. We're just going to write 1460 here. We're not going to worry about 50 ticks out there. Now what we're going to do is I do the same thing along the bottom. So I'm just going to draw a black line, and we'll just simply go ahead and move it. I'll make sure that it's a good horizontal line out here. And if we try to do the same thing, so that I can grab it here, I would have to say that if we're going to be conservative, you'd probably take a look at about right here, the bottom of that consolidation, really being you can use almost the open of the candle at 4:15 on January 2nd. So that low is 1449. You can see that area of 1449. Looks like 1450. We're going to use 1450 was tested at 615. Why 1450? Well, I can subtract 1460 from 1450 pretty easily. So now we're dealing with a 10-point area. You can use something that's a little bit more aggressive if you want, but let's just take a look at that 10-point area that contained price really well. You got a little breakout, a false breakout to the top side. That we already reviewed. You also had a little false break to the bottom on November 30th. In fact, if I go ahead and I just simply add that relative strength indicator to the chart here, you can see in both instances when you had that break to the top side here at 4:15 in the afternoon, what did you get? You got the market moving into that overbought territory. Again, this is a shorter term chart. It's a 60-minute chart. As well, when you had the market moving down and trying to break out of that consolidation range, it also moved where? To the bottom of that relative strength. We'll call it relative weakness at the bottom, relative strength up at the top. And when you get to those stretched areas, what is likely going to happen? Now, if you're an intraday trader and you're not using this tool, you've got to say, why not? Why not? If you're trying to scalp a few bucks here, this is about the easiest setup and tools and candles that you possibly could humanly come up with out there. You really ought to use this. Now, what does that 10 points really mean? Now, number one, when you're in a consolidation pattern, typically, the probability is, and I don't know what the number is, it's like 75, 80, 85%. It is a high probability that when you do break out, you're going to break out in the direction that you came from. Well, where was the market coming from here? You know, if you, I was gone because of I had food poisoning, so I wasn't here with you on Monday and Tuesday, but when I came back on Wednesday, and, you know, the larynx or the voice is starting to get back in there. The throat is feeling a little bit better each and every day. Of course, I keep coating it with my green drinks out there. I said the market is going to move up. In fact, moving up into a set of lunar and celestial aspects out there that have really great high probabilities of identifying market turns out there. So I know what we hear about all the bulls out there. Could just be a correction, could be a small correction, could lead to something bigger out here. But let me keep things on track. So if we take a look at this consolidation pattern, you got 10 points, broke out of it yesterday, broke out of it with some conviction. Now, when you broke out, what was happening here? You had the relative strength strength moving where? Into that overbought territory. So at 6:30 in the evening last night, you had the market get up to a high of 1471. 1471. So just take a look at that little breakout pattern there. 10 points was the range, 1450 to 1460. All you do is add 10 points to that 1460, and that's really your first price objective. So if you were playing that, if you knew you had a consolidation, you were playing that from the bottoms. Every time it got to the bottom, you were buying. The last time you would have been buying this would have been right around that 11:30 time frame on January the 8th out there. And then you got your full 10 points out here. How does that work? It always works like this on a continuous basis. Does that mean that the market can't go any higher out there? No, it doesn't mean that, but you got your first objective out there. So take a look at whatever the charts are that you are trading. Pay attention to those consolidation areas because they can be a huge friend for you. They can also tell you when the market moves either to the top or the bottom. If this had broken to the bottom, you would have been looking at a 10-point move to the bottom. This would have had you going down into the 1440 level. What's it? 1440? Well, 1440 would not have taken you down to the gap here that was open from January 2nd, but that's what the move would have been out there. So hopefully you can use these two tools out here in your trading system. If you'd like additional education, if you're looking for education, folks, then go over to my newsletter service, Mastering Probability. I believe under Breaking News, there's even a link there. If not, go on the homepage at tfnn.com, click on my name there, and because not just is it a newsletter, it's a new that, if you're just looking for what should you do, what do I recommend you do? Well, that's on the first page there. But if you want to understand why, the logic behind it, and so much more that I don't share during the couple hours that I am on the air here with you, and if you want to get all kinds of education, there's 30 hours. I finally created the index for 30 hours worth of education and training that are archived that come with my newsletter service. So go try it out there for 30 days, even if you're not going to use it. Do yourself a favor. Go out there and educate yourself about technical trading patterns that exist out here in the marketplace. Be my pleasure to be able to teach about these things. They will provide tools, and they'll provide shekels and money and dinero and euros and yen and everything else into your pocket. And that's really what it's all about. It's early in January, not too bad to go ahead and set a New Year's resolution and be really resolute about it. Now, let's go take a look at what is it that we should be aware of. Where is the boogeyman hanging out here in these charts? And we're going to go over to the New York Stock Exchange. If you've been listening to my show, the New York Stock Exchange really key, as well as the Russell 2000. Excuse me out there. Sometimes I got to, just with this whole throat thing, I got to take a little bit of water. Excuse me for one moment. There we go. Now I just sprayed that water all over me, so that's pretty good. Now we're going to go take a look at the New York Stock Exchange. We're going to look at the weekly chart out here on the New York Stock Exchange, because where that boogeyman is hanging out is a 3 drive to a top pattern, a possible 3 drive to a top pattern here that is setting up. It's got all the price. It's got all of the Fibonacci expansions that you would want. Does not necessarily have time. Time is off by about 2 weeks out here, but that is close enough for my work. What you're taking a look at here, I'll go ahead and blow this up. We come back, we'll go further into the New York Stock Exchange. We'll look at that 3 drive to a top pattern coming into an area of resistance out there. It says, be careful. 877-927-6648. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And leading out here in the marketplace on the way up and the way down, you got Apple is the leader, closing out at 523 last night. Last trade firing off at 520. BHP Billiton, they closed at 78.69. Trading out right now at 76.98. You had out with numbers this morning on the financials. Wells Fargo leading things off. They closed at 35.40, trading at 34.91. Not a big deal. To the upside, you've got the Infosys closing at 43.95. They're trading up $7 out at $50.84. Allegrin Pharmaceuticals, AEGR, they're up at $27.95. They closed at $26.64. Best Buy up out with numbers or at least comp sales earlier today, which weren't really that good. However, trading out at $13.05, they closed at $12.21. So let's go back to the New York Stock Exchange and let me teach you, a way to take a look at 3 drive to a top pattern, 3 drive to a top, or 3 drive to a bottom pattern. Those can be reversed. Those are patterns that you want to be paying attention to. Oftentimes they lead to reversals out there. Now, what you want to do is, it's not something that you want to force. You want the 3 drive to the pattern to have symmetry. And by symmetry, I'm talking about price and time. When I refer to price, what I'm really referring to is expansions of price. I'm referring to Fibonacci expansions of price, whether it's a 1.272 expansion or 1.618. But those are ideally what it is that you're looking at. So if we take a look at the weekly chart here of the New York Stock Exchange, and some of you don't have the same tools that I have, so I'm going to show you how to do it with the tools that you do have. Most every charting software package has a a Fibonacci expansion and contraction number, and certainly most should have the ability for you to be able to put in 382, 618, 786, as well as 1.272, 1.618, and 2.618. So hopefully yours does. Now, in this case here, all you would do is I'm going to take the swing point here from May the 4th, the high out at May 4th, the week of May 4th. We're looking at a weekly chart, 82.11.65. If you go from that high down to the low that was put in on the week of June 8th, so we know it's the June 4th low, June 8th of 2012, you'll see the 1.272 area comes in at about $8,400.80. Well, if you take a look at the weekly chart here, September 14th, you get up to 85.15. That's close enough. You've got to be able to make sure that you're giving some margin out here. You'll see that the tool that I use actually goes ahead and rounds up and rounds down to be able to give you that little variance out there. So that is a 1.272 expansion that took place. Now, if you take a look at, we're going to come off of the swing point here, which was the September 14th swing point, all the way down to the low of the swing point that came in November 16th, the week of November 16th out there. What you will see is yesterday, the New York Stock Exchange got up to the 1.272 level. It's at 87.13. So it has a little bit of room out there that it can play with. So now you've got two 1.272 expansions out there. With regard to time, I'm going to put a little tool up here, just a cycle tool, allows me to determine easily the number of bars between points. So if we go from the swing point that I used, May 4th, out to the swing point of September 14th, you will see right here that it's really off by about a week because it would be the week of January the 25th. That means it could be the Monday. That time is off by. Well, that's pretty darn close, folks. That is close enough for me in my books. Now, if we take a look at that pattern out here, I'll just simply draw it in with the tool. That way it's all nice and colored in here. You know, what you will see on the weekly chart here is you will see that 3 drive. And that's in essence what it should always look like. You don't want to be able to force these patterns. You want to make sure that you're looking at expansions. Make sure you're very close to where you have the 1.272, the 1.618 patterns out there, and make sure that you've got the time. And then you'd like to be able to see all patterns you'd like to see competing against perhaps other patterns out here. So if I go ahead and take a look at what other patterns do we have in the New York Stock Exchange, and we go ahead and we pull this back here. Well, how about this pattern right here, which is the swing point high that is coming into from May of 2011. That high is 87.18. Your day closed at 87.13. So I would say coming against making 100% move of a move. And that is what the New York Stock Exchange, in essence, has done here today. If I was going to teach you anything, if you were going to read Tom's book, The Art of Timing the Trade, if he was going to teach you anything, it would be when you make 100% move of a move, what are you going to do? The market is going to go ahead. It's like running the race. It's run the race, and it's gotten back all the way to the highs here of May of 2011. Typically, that is where you see the market do something different after you make a move of a move. Well, coming into it with a 3 drive pattern, that's not a good thing. Coming in with a new moon, that's not necessarily a good thing. Coming in with a moon conjunct Pluto, that's not a good thing. How about Venus square Uranus? You don't have to believe in those things, and I am far from an astrologer. I mean, really far. All I've done is taken hundreds of years' worth of data, dumped it on charts to see if by any chance it's had any high probability of identifying market turns out there. The good news is it does. And the great news is if those areas get taken out, you will see much, much higher prices. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. Getting a little better each time here. Dow is off 23 points right now. S&P down 1. Composite off 2. Small caps flat up 70 cents right now. Microsoft off 14 ticks. Intel up 9 tickets. Google is off $2. Cisco down 11. Apple down $3 and change. Leading things to the upside here, you've got Infosys. Let's go take a look at this. This is having a stellar morning. They were out with their earnings here. They did revenues of $1.9 billion versus $1.8. Earnings per share 76 versus 80 cents. Net profit $434 million versus $458. They must have some good guidance out here. The ticker symbol on this is INFY. So we'll go ahead and put that here on the screen. We'll go take a look at it. They are a outsourcer, I believe, of technology services, INFY. And so let's go take a look at it. Gapping up nicely, creating a huge little island out here. Look at this thing. So let's go let's go see what it's trading into. This thing has got gaps all over the place. So let's investigate this stock chart, see what in the heck it is doing. It's up with some nice volume this morning. Most certainly, it's going up against a downdraft out here, a couple downdrafts. Up so far this morning with 2.6 million shares. So what it is coming into, where this should head, is where the most recent downdraft is in this, which takes you back to April 12th. April 12, 2012. The low of that candle is 55.43, 3.5 million shares out there. But really what it's going against is the downdraft day. That was the following trading session, about 10 million shares. 9.86 to be exact. And we'll see what this equity does as it gets up. We'll put this on a longer-term chart. Let's put this on a weekly chart, see what we've got here. So weekly chart, you can see it coming right into that same downdraft. So expect it to run into some resistance. The trading range on this here seems to be really set up right about where I'm drawing this black line across here, which is going to be somewhere around the $60 level. It's at 52.45 right now. I would say right at about 57.40 is where this equity may start slowing down. That was on Infosys out here. Let's see, did it complete an A to B equals CD down? The A to B equals CD down that I would be drawing on this would be right about like that, and didn't really complete that out there. But this thing here has got, on the daily chart, I don't know that I've seen a stock chart like this too often. Take a look at this little island down here that it really created. That little island coming off of October the 12th when it had another downdraft. So this is a bit of a yo-yo of a stock out here. If you take a look at the A to B equals CD up, that this looks to also be completing. You'd come off of the low here from July 12th all the way up to the high on October 4th out at the 49, almost the $50 level. And that would be your B point. Your C point down looks like maybe about the low of December 17th down around the 41.18 level. You can see $53.10 would be your 1-to-1, but it'll do more than that. It'll do the 1 to 1.272. Most certainly, that's that 56.33 area, which would go ahead and close or would come up towards the top of the gap up there at the April 13th candle. That's on Infosys. You've got Cognizant Technologies, CTSH, not out with earnings, but they are up 4% this morning. So let's go see what this is trading into. CTSH, again, is the ticker symbol. As we take a look at, so gapping up this morning, having some decent volume here. This equity is trying to head up towards its most recent highs, trying to really take out an area of resistance that goes back, you'd have to say, to the July 7, 2011 timeframe, right around the $77.71 range. It's trading at $77.91 here right now. Well, that's got a nasty-looking high-volume low, doesn't it? It was tested, though. That high-volume low was on May the 7th, 38 million shares to the downside. So let's put this on a weekly chart. It's on the daily. Let's put this on a weekly chart, take a look at it. Then we'll go take a look at a couple things drop, and we'll look at Wells Fargo most certainly, and take a look at the financials out there. So as we take a look at Cognizant Technologies, you can see really trading right into a resistance area. If you can get above the $77 area, 78 we'll call it, it's trading at 77.98. What this thing ought to do, in fact, it ought to go up and test the May 6, 2011 weekly high out there at the $83 level. That's got 26 million shares up there. It's going to need more energy in order to get up to those levels. But here is another little island out here. So, these islands, there's going to be islands all over the place at some point in time. But here's a equity. You're taking a look at a weekly island reversal candle formation. This here is an equity. If you're not watching this on TigerTV, I'll explain it to you. This equity, folks, I'm looking at a weekly chart. So if you take a look at the week ended May 4th, the low and the close is 69.66. Low is actually 69.53. The following week, the following trading session on Monday, gaps down. For the week, moves down to a price point anywhere between $59.37 to $62. And it does it with on volume. In fact, if you take a look at this weekly chart and you go back, it's the largest volume other than the downdraft going back into 2007 timeframe, November 2007. So gaps down with volume. But what you can also see, and you can learn from this candle, what you want to learn from is even during that trading session with all that volume pushing down, if you looked at that candle, who was in charge of that session? Forget about the fact that it gapped down. You can see the bulls were coming in there and were telling you that they wanted to defend the position. The position they were also defending was going against a swing point, 100% move of a move, just like we were taking a look at in the New York Stock Exchange. So that's going back to the August 19, 2011 timeframe out at $53.54. What this equity does is it really travels sideways, goes down and actually tests that low from May 11th with 67 million. The first time it tests it is on June 29, 2012 with 14 million. And if you look at that candle session there, that weekly candle session, who was in charge there? Certainly the bulls came in, went down, tested the swing point on lighter volume, In fact, as far as swing points, it didn't get down to the August 19th level, but that had 29 million shares that you would benchmark, and it was going with 14 million shares. I was saying, what, it didn't have enough energy to move down there, and you could just see by taking a look at those candles that the bulls here, as the market moved down into those areas, even when it tested those lows, and it tested those lows on July 13th with 15 million shares, it gets down to 53.92, closes at 57.26, but look at that wick here. Look at each time the market gets down to test those areas, you see the bulls stepping in there. You didn't have to buy this equity or what have you, but take a look. It created this little island, folks, that went from May the 11th all the way to August the 3rd out there. Must be that next trading session, August 3rd of 2012, that Monday, you come in and it gaps up. Look at that little weekly island out there. That, folks, is very bullish. So if you put that together with what you were looking at, if you're reading the message of the markets, and the best way to be able to read the message of the markets is look at what the bulls and bears are telling you, and they consistently and constantly, they have to create a candle each and every trading day, week, month, depending on whatever time frame it is. And they're always providing you with information out here. These are the type of patterns, if you're scouring for charts, these are the types of things that you're looking for here, because then at this stage, what you've got now, you had this little open window from the weekly chart, gaps up with 19 million shares, just really travel sideways. This was a good enough signal to go ahead and take a trade on this equity. Your target on this, of course, would have been this downdraft candle. That's where it got up to. That was at May 4th area. Didn't make it all the way to the high, but that is a very bullish, just like on the other side, bearish side if you have island reversals at the tops out there. So that was on Cognizant Technologies. Now let's go take a look at a couple of the stocks we were looking at yesterday, just so we can take a look at an update. You got Wells Fargo. Let's take a look at Wells Fargo. Moving down this morning with some pretty decent volume behind the move here. Now, you got 11 million shares, so this thing ran into resistance. We had Rick from British Columbia calling yesterday. We were taking a look at Wells Fargo. Had good volume yesterday, was getting towards the swing point of September 14th. Never made it up there, which would have been the 35.56 level. That had 42 million shares yesterday. It moved up with 37 million shares. What has stopped Wells Fargo in its tracks is this day from September 21st, 2012, 67 million shares. So you've got volume to the downside. The top of that level happened to be $35.45. I don't know if Rick and I talked about that, but you can see how that has been the area of resistance for Wells Fargo. Today here, even as the move down, the gap down right now, intraday, as you're taking a look at that candle, even though it gapped down, who is stepping in here? You got the bulls or the bears? You got the bears pushing it down? Not right now at 9:43 in the morning out here. So that's on Wells Fargo. Let's go take a look at, we were looking at Visa or MasterCard yesterday. Which one was it? It was MasterCard. We're taking a look at MasterCard because that has been such a strong leader in the marketplace. It did not complete a bearish engulfing candle. It did give you a little dark cloud cover candle. That is also bearish. Would need to see follow through today. The type of follow through in order to get some type of reversal today would be, you'd be looking for a close at or below 525.20, trading out at 528.02. This is a stock that we're going to want to be paying attention to because of the potential that this could create a island reversal here to the downside. Not saying it's not, but it's got the setup. You've got enough of a gap. And by gap, what I mean is if you take a look at the high of the trading session on January 8th, that high is 521.05. The low of the next trading session, 522.67 out there. So you got a little bit of a gap out there. And if this equity were to gap down below 522.67, not the intraday trade up to that level, you'd have a island reversal. And you're looking for signs of weakness from the leaders out here. You're also looking for strength from the leaders to either keep moving or you're looking for the new leaders that are out there in the marketplace. Let's go take a look at some of these equities here. Also that, let's see, dollar-wise, dropping to the downside. Nothing huge. You got Perigo Company, PRGO. They're the leaders in the clubhouse here. Let's see if they were out with out with earnings. No, they were not. PRGO, let's go take a look at it, see what it is trading into, see what kind of volume PRGO is behind this move. And then we'll take a look at the XLF just to see what's going on inside the financial sector out there. But you got Wells Fargo kind of missing numbers this morning. Revenue was just slightly lower out there. As you take a look at Pergo, PRGO, gapping down this morning. Volume into this so far, 225,000 shares. This thing has shown signs of weakness. You've had some volume coming off of this. The first sign down, the first breakdown on this equity was August the 16th, down with 3.2 million shares. Goes ahead, makes a higher high, does that with 418,000 shares, moves down again. So you've got institutions in here that are dumping this, 2.7 million shares, November the 7th, gapping down again with this equity here. You see a little bit of sign of weakness as well on December the 13th. This thing here is now testing. We'll see the support on this. The untested support is the gap here from January 2nd. Looks like that's what it wants to test. Has not been down to that low. 105.09 would be the number. It's been down to 105.52. 105 again would be the 9 there. Would be the number there for a test if that is going to hold as a possible support area. Let's go over into the spiders out here. Let's take a look at the XLF. Where is she? Where is she hiding? Come on. It's right here. I'm sure it's right in front. There we go. Right. It was right in front of me. It was dead solid center. So we're going to take a look at the XLF trading out at 1706 right now. Volume-wise, nothing to worry about. The XLF not showing any real weakness here. What the XLF is, though, is over. It's in the overbought condition. It has been there, really been traveling sideways, really since that January 2nd, 3rd, 4th time frame out here. We take a look at expansions and patterns on the XLF. Let's put this on a longer-term time frame. We don't want to put it on the monthly time frame because that looks pretty awful. But if we take a look at this so let's take a look on the weekly time frame. This is good because you can see it is up against a resistance here. I'm just going to draw the black horizontal line, and then we'll go ahead and move this. Well, geez, I drew it right where it was. How it needed to be. How about that? So if you're taking a look at the XLF, you can see now the consolidation range on this. We were talking about consolidation ranges earlier, right? So let's go ahead and apply that same tool when we opened up the segment here on the XLF. So that black horizontal line going across the screen, you can see acting as a resistance area. You created that or tested that area in April of 2010, came back up into this level in February of 2011. You're back up there right now. That's the top of it. Let me draw a line on the bottom, and then you guys will help me with the resistance area on the bottom, and you can do the same. Well, geez, looks like I drew it right about where it should be here. That would be, I wouldn't say I would say the most conservative would be probably right about right here. Wouldn't you guys say that would be about the most conservative? I think so. So we're going to use that as the conservative line. So again, if you're listening on the radio or your mobile device, just check out the archive of this show here, and you'll be able to see it. So the range here, the range that we're looking at, go ahead and put this on a pad of paper here. If I can, looks like the top part of the range you're looking at is about $17. So you got $17 on the bottom side. What we're going to use as the consolidation area is right around 13. Looks like 13.34. We're going to use 13. So we got about a $4 range, consolidation range that this thing has been in. We're going to call it been in since August of 2009. So if the XLF can bust through this level, all you have to do is add $4 to 17, takes you to $21. That's what it would break out to. $21 would take you up towards the top of its swing point from September 19th of 2008 out there. However, as I pointed out to my clients in this morning's newsletter, I looked a little deeper into the XLF. It's got some warts out there. It's got some problems that most have overlooked. 877-927-6648. Dow's off 14. S&P's down 2. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back as we come into this last segment here. The Dow's off 22 points. S&P's down 2. Composite up a point here. Russell off. It's pretty flat out here. New York Stock Exchange off 17 points. NDX up $1.63. And let's go take a look at the ETFs, the ETF indices. Let's take a look at the SPYs. Let's start with the SPYs. Take a look at what we're looking at here. Yesterday, you had the SPYs move up into the September 14th swing point. We go ahead and draw that line here at the bottom. The low of September 14th is 146.76, 169 million shares as price moved up into it yesterday. You can see moving up there, trading still above that area. Again, the number is 146.76 out there. And the volume, again, was 169 million shares. Moving up into it with light volume yesterday, 130 million shares. So far today, in the first 25 minutes of trading, 10 million shares. You'd see a rejection of that area would be a close below the September 14th level, the 146.76 on less than 169 million shares. Preferably, you'd like to see it close with less than the volume from yesterday of 130 million shares out there. That is on the SPYs. Let's go take a look at the diamonds, the Qs, and the IWM. So the IWM yesterday really, just kind of having still in this little sideways to up range out here. And if we take a look at the IWM, if the market is going to break out, the IWM's next level where it would trade to would be likely the 1.272 expansion. And that is a ways up here. That's in the 89.91. The 90, we're going to call it $90. It's trading right now at $87. So yesterday, the Russell 2000 was trying to give us a reversal day, but late in the trading session around 3 o'clock as the market came back, it did not do that. But it was close. You had that on the Russell 2000, and we had MasterCard that we were looking at, but that was not to be seen yesterday. So we'll just have to continue to keep an eye on it. Let's go take a look at the diamonds. Lucy in the sky with diamonds. See what the diamonds are doing. The Dow diamonds getting up slightly above the 0.786 Gartley sell pattern. That is, we're going to call it still in play out here. And the diamonds here struggling, really struggling. Diamonds trying to get up into this downdraft. Let's go ahead and draw a black line on this one across the chart. That downdraft that we're looking at on the diamonds is the October 19th, 2012 level. That had 10 million shares yesterday as it was moving up into that area, moving up with 6 million shares. Not enough volume on the way up there. It hasn't tagged it. For the preferred test, bearish preferred test would be to actually test that area. Right now, the diamonds trading out at 134.22. Volume so far, 573,000 shares out here. Let's go ahead and round this off by taking a look at the Qs. As long as we're taking a look at the Qs, what is Apple doing here? Apple's off 43 cents, so Apple not doing much. We know the Qs here. This is where we're going to get a big piece of information. The Qs has this tested area of support, which is set up by the January 2nd level. The bulls are defending that position big time. Even yesterday, when you take a look at that candle out here, even as the Qs were pushing down into that gap, which was set up by January 2nd. That low was 66.48. Yesterday, the Q's getting down to 66.55, but you can see stepping in here, and really only 2 sessions here where you had any kind of bears try to show up at the party were on January 3rd and January 4th. So the key here from whether you're bullish or bearish, you are paying attention to whether or not the Q's close inside that gap. They close inside the gap below 66.48. It sets up a run most likely to 63.58, certainly 65.25. Stay tuned, folks. Tom and I will be up next. If you're off to start your Friday, have a fantastic Friday, an incredible weekend, and I'll look forward to being back with you on Monday. If not, stay tuned for the Bull-Bear Binary Option Hour, sponsored by Nadex. Be myself, Daryl Martin, and Tom O'Brien. Take care, folks.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.